Hey everybody, Terry the Real Estate Guy. Thanks for tuning in today. It's good to see you. Hey, listen, this week the Department of Housing and Urban Development basically came out with a new guidance on forbearance, foreclosure, and evictions for government-backed mortgages. That also includes the Department of Veterans Affairs as well as the USDA, any government-backed mortgage. There's a 22-page document I will link below, and we're gonna take a look at the highlights of that document today and just kind of hit it at a high level, and you can see what it means. Some of these results in here, the things that they've said they will do, are really good for the consumer. And I think, honestly, it's not going to be a bad thing for the housing market. So let's jump right in, okay? So let me kind of open this up for you. So these are the summary of the changes. Basically, extending the foreclosure and eviction moratorium to June 30th, 2021. And then also extending the forbearance start date to June 30th, 2021, which basically means that if you weren't in forbearance and you still need it, you can jump in on or before June 30th, 2021. This is interesting. Let's say you've been in forbearance for a while. This is providing up to 2 3-month extensions. So 6 months in total, but 2 3-month extensions, and it says for certain borrowers. See that HECM extension period right there? HECM is basically a reverse mortgage. A lot of retirees and seniors get those. Allowing borrowers, regardless of delinquency status, participation on a COVID-19 forbearance plan. All right, so what that basically means is it doesn't matter if you're making your payments or not making your payments. As long as you reach out to your mortgage provider, your service provider, you will be able to take part in this, okay? And then it also removes the restrictions on borrowers receiving more than one COVID-19 home retention option, and we'll talk about that in a minute. All right, let's jump down to some of my notes, okay? So you've taken advantage of the forbearance, and now you're kind of moving into it, and you can get back to making those payments again. What options are available to you? Well, all of these options are available to you right here. The ones I'm going to mark in red right here, those are all available to you. And they all have these weird names: the COVID-19 Standalone Partial Claim, the Owner-Occupant Loan Modification, the Combination Partial Claim. Like, it's Greek, you know? It's really hard to understand. But each one of these things is their own little program, and I like to tell people they're containers. So what container do you fit in? And your mortgage service provider will be able to help figure that out for you, right? Now, also, if you can't resume payments, so let's say that you're unable to get back on track and make your payments, basically, the federal government is saying, we're going to give you an out. We're not going to make you go through foreclosure and wreck your credit and file for bankruptcy and all that stuff. We're basically going to give you the option of a pre-foreclosure sale or a deed-in-lieu of foreclosure. To me, this is a big deal because everybody keeps talking on YouTube and you hear it all the time, like, oh, the foreclosures, the waves of foreclosures are coming. But according to this document, they're not, because the government is not going to let that happen. Now, I don't believe the foreclosures were planning on coming anyway because of how much equity people have. It's an insanely low number of the people that are upside down on their mortgages. And so values would have to tank quite a bit before we would have any kind of foreclosure crisis in America. All right? So now let's just jump back in here and look at some more notes. Okay, so check this out. It says mortgagees must offer a COVID-19 forbearance to any borrower that experiences an adverse impact on their ability to make on-time mortgage payments due to the COVID-19 pandemic, regardless of their default status. So I am not an attorney. I don't work for HUD. I'm not a housing counselor. I don't know the ins and outs of these rules, and you need to check with your servicer. But I kind of take that to mean that if you were behind on your mortgage before the pandemic, and you come in and you say, I'm even more impacted in a negative way, I need this help, you're going to get it, okay? Now, owner-occupants must be reviewed for the COVID-19 standalone program. So you remember earlier on, we kind of covered these things back in here. That's what all of these things are right here, all right? So now we're gonna keep going. So must be reviewed and qualify. Eligible borrowers may receive more than one COVID-19 home retention option. Well, what does that mean? Let's assume that you bought, for a real estate investor, let's say, you bought an FHA quadplex that you lived in one unit and you fixed up the rest and you qualified for one of those types of FHA investor loans. This is basically saying if you still have that loan, you can now have that one, plus if you have a home loan, let's say you have a your primary residence plus an FHA loan or a VA loan on a vacation home. Well, holy cow, this basically says that you can use this on more than one house. So no longer do you only have one mortgage to file for forbearance. You can do it on more than one. Okay, so let's keep moving. This is pretty interesting. So I highlighted this paragraph because it basically talks about communication. How do you communicate to your mortgage servicer provider? And it's defined in this document. Basically says that forbearance, acceptable methods of communication regarding a COVID-19 forbearance include, but are not limited to, emails, text messages, fax, teleconference, website, web portals, etc. If a mortgagee sends out a general communication advising that a COVID-19 forbearance is available, the borrower may reply to that communication request. So what they're saying in this is if you get one of those mass emails from your mortgage service company, right, Wells Fargo, Bank of America, whatever, and it says, hey, take advantage of this COVID-19 plan, and you hit reply, right? And that reply is one of those emails that you always see that says, don't reply to this email. This basically says they're not allowed to do that. And they have to be able to, you have to be able to respond to that, and that email goes somewhere. Now, if I were you, I wouldn't plan on that. I would actually go in and pick up the phone, make a phone call, and talk to your mortgage service company direct, or at least fill out a form on their homepage or their website or something to that effect. Okay, this is crazy. Look at this. This is amazing. Okay, so if you see the green highlight right here, check this out. The mortgagee must waive all late charges, fees, and penalties, if any, as long as the borrower is on a COVID-19 forbearance plan. So your penalties get waived. The late charges, late fees, all that stuff gets waived. It's unbelievable. Okay, here's the crazy thing. Let's say you're in forbearance and you're going back into one of these programs, and they're going to put you in what's called the COVID-19 Owner-Occupant Loan Modification Program. Now, let's look at what makes you eligible for something like that. There's two little bullet points here, right? The mortgagee must ensure that the borrower indicates they have the ability to make modified mortgage payments. Do they have to supply proof? Income? What do they? Or just indicate by email that they have the ability? And the property must be owner occupied, right? So now this is crazy. All fees will be waived. All fees, penalties, late fees, anything that's accumulated on that mortgage, as long as it was not done prior to the pandemic, can be put in there. And then the other thing that just absolutely blows my mind is that the mortgagee must ensure that the COVID-19 owner-occupant loan modification fully reinstates the mortgage, fully reinstates it into a separate entity mortgage, is how I read that. And then it must ensure that the modified mortgage, including any adjustable rate mortgages, graduated payment mortgages, or growing equity mortgages, are modified down to a fixed rate. What? That's insane. A fixed rate. So they're going to take all these screwed up loans, potentially, put them down into a fixed rate mortgage. It even gets better. They must ensure that the interest rate is no greater than the market rate defined by HUD. So they're basically telling you, we're going to give you a reasonable interest rate. And right now, the rates are more reasonable than they've been in decades, ever, historically. And then the borrower's principal and interest payment may not increase under the COVID-19 owner-occupant modification unless, and there's some unlesses there that you have to look at. So the payment can increase. You're going to get locked in at a fixed rate, and you're going to reset your mortgage to 360 months. I mean, that is crazy. That is crazy if you have an FHA or government-backed entity. Now, I will tell you, if you're looking at a VA loan or a USDA loan, I would encourage you to download this document and also go to the USDA and Department of Veterans Affairs and just double check and make sure that these terms are exactly the same as they are as on an FHA loan. Okay. All right, let's keep moving. Okay, there are other programs. Remember that big bullet point list we saw earlier? There are other programs here, and I'm just going to kind of fly through these because they break down the program and then they talk about the eligibility requirements. Some are the same as what we just talked about. Some are different. So let's just dive in. So this is the combination partial claim and loan modification here, right? So if you don't meet the eligibility and term requirements for the COVID-19, then you get to look at this one, this container. Remember all the different containers we talked about. And it gives you the eligibility. You have to be able to make the payment. And the property has to be owner-occupied. And it just goes through and it talks about some of the same things before, that all late charges and fees are waived, and that your loan will reset, and it's modified to a fixed rate, except in this particular one, your payment actually might go up. payment might go up in this case, okay? And then there's all of the rest of these, the FHA-HAMP combination loan modification partial claim with reduced documentation. I have no idea what that is. Okay, you're gonna have to get in there with your servicing provider, and this video doesn't have enough time to kind of talk through that. But these are reverse mortgages, so those are the rules regarding reverse mortgages. And you can kind of see that the eligibility requirements here, and then just go to the link down below and kind of download it. So all said, let me see if there was anything else that kind of blew my mind in here. The waiving of the penalties, the putting you down at a 30-year fixed rate low mortgage and resetting everything to a new mortgage just kind of blows my mind. Look, you know, we're in strange times right now, aren't we? It's a little crazy. I would tell you, I'm a real estate investor as well as a homeowner. I don't necessarily want to see all these foreclosures out there, because I know every time there's a foreclosure, somebody loses their house, right? And so I think the federal government obviously is underwriting this. It's going to cost a ton of money through all of the programs that are available. But at the end of the day, I think the federal government is basically saying, hey, listen, we want you to stay in your homes during this tough time, and we're willing to work with you through it. So I survived the last Great Recession in 2010. It was complete opposite. It was like anything goes, and the mortgage companies toppled, and it was too late to save anything. I think we've learned from our mistakes. I think we're going to have, you know, consequences based on this big spending for sure, inflation and all the stuff that's going to follow over the next several years because of what we're trying to do here. But at the end of the day, a catastrophic economic environment is something that I don't think our country can handle right now. You may disagree, and I want you to. I want you to put it down below. Listen, if you felt like I brought value to you, would you at least like and subscribe to my channel? I'd be honored. And thank you so much. I'm Terry, the Real Estate Guy. Thanks for tuning in.